A mortgage for self-employed borrowers. Hey, what's up, everybody? It's Jeff Trevarthen, Jeff the Mortgage Pro. Thanks so much for joining me today. Do me a huge favor. If you like these videos that I'm putting out, make sure you hit that like button down below. And then if you like to see when these are coming out, they usually try to put them out every Tuesday and Thursday of every week. Go ahead and subscribe to my channel down below, and that'll let you know when the next videos come out. So thanks so much for your support. I appreciate all the nice comments and feedback that I get on these, and I really appreciate that very much. So today what we're looking at is self-employed borrowers, and there's two different ways that we can qualify self-employed borrowers. One is the traditional way, and one is another video that we'll talk about called a bank statement loan, which is looking at your bank statements to help you qualify. But today, in today's video, what we're looking at is the traditional way to qualify a borrower. So remember that when we lend money, these are most loans like government loans, conforming loans, jumbo loans. We only want to lend money on what income you pay taxes on. So if you're a self-employed borrower and you're trying to get a loan from us, we want to make sure that you're paying the taxes that you're supposed to be paying on the income that you're generating. Now, everybody knows that accountants are really good, and there's a lot of self-employed borrowers that have really good accountants, and they can help you minimize the amount of tax that you're paying because of all the different write-offs and different situations and scenarios that they can help you do that, which is awesome. And I think that's very good that you work with a good accountant. However, on the lending side, we look at it a little bit differently. Again, we're only looking at the amount of money that you pay tax on. So when you're going to get a loan, the traditional way for self-employed borrowers, here's a couple things that we're going to do. We're going to calculate your income a little bit differently than we would if you had a salary or you had an hourly wage. We're actually going to look at your tax returns over the last couple of years. So here's some of the things that we're going to do. We're going to figure out what type of entity do you have first. Are you self-employed as a sole proprietor? Do you have an LLC? Do you have a S corporation? Do you have a C corporation? Do you have a partnership? Those are all different ways in which you can be self-employed and have protection. Obviously, the different ways you can be self-employed. So it depends on what you have. Those are what documents we're going to ask for. So including your personal federal tax returns, we're also going to ask for any other documentation for your business tax returns as well, depending on, again, what type of entity you have. If you have a sole proprietorship, you're just going to file that on your regular personal federal tax return, so we don't need any other documentation based on that. Usually, we're just going to look for what type of income you have on your Schedule C going forward, okay? Next thing we're going to collect all the necessary documentation depending on the structure that you have. So this could be like your federal personal tax returns. We're definitely going to need those. We're definitely going to need your business tax returns. And again, depending on what structure you have, we're going to look for those types of documents. K-1s, W-2s, year-to-date profit and losses. Those are all some of the other things that we may need to look at when we're calculating your income. Now, most lenders, and also like Fannie Mae and Freddie Mac, the VA, FHA, all have different worksheets. It's literally just a worksheet. They're all fairly similar, that you can go through a tax return, and depending on what item we're looking at on the tax return, we can either add that or subtract that to the income to determine what your net or gross income is going to be on the money that you pay taxes on for your taxes. And we all have these worksheets. Every single lender across the country has one of them. They're going to use that to be able to determine how much money you make on a yearly basis. And then we're going to divide that by 12 and figure out how much money you make on a monthly basis. And that's the number that we're ultimately looking for, is that monthly income coming in as a self-employed borrower. So it's not to say that it's harder to qualify as a self-employed borrower. It's just depends on how your business is, right? At the end of the day, we want to know how much money you're going to make and how much money you're paying taxes on. Everything else that you're going to have to do when you're determining getting a loan, for a government loan or for a conventional loan or for a jumbo loan, is all the same. Like we're still going to have to verify your assets. We're still going to figure out what your credit is, and all those things fit into the different factors of what we can qualify you for a loan. So when you're a self-employed borrower, literally the only thing different that we're doing is determining your income based on your tax returns, not based on your W-2s or your pay stubs, because oftentimes you don't have those. Okay. Some instances you do have W-2s when you're self-employed, and that's a little bit more complex. We don't really need to chat about that today. So again, once everything is qualified and calculated with our worksheets that we use for these types of particular borrowers, then we don't really need anything else that's different outside the box beyond that stuff for qualifying. So if you can qualify this way for a home loan, this is definitely going to be the least restrictive route. You're going to be able to get the traditional primary first mortgage interest rates that you might see online, or whatever the best rates that a lender has to offer for this particular product is going to be available to you. Okay. If you have to go and qualify the different way, which is, we'll talk about it in another video, the bank statement program, your interest rate is definitely going to be higher because of the flexibility in the way that we let you qualify in that way. Okay. So if you are a self-employed borrower, okay, you're an entrepreneur, you're a small business owner, anywhere in the United States, and you're trying to figure out how to get qualified for a mortgage, what I would always suggest is that run your situation by a mortgage originator, someone like myself, that can help you figure out, how much income do I make? Because we're the ones that look at this stuff every day. We can run it by an underwriter if it gets a little bit complex, and the underwriter will tell us what type of income you make on a monthly basis, and we can figure out, is this the right way to use to qualify you for a mortgage, or do we need to go to an alternative source or alternative way to qualify you for income? That's the first step for you to do. I'd love to be that person to help you out. So if you would like to, I'll leave my calendar link down below. And if you're a self-employed borrower looking to get qualified for a mortgage, please reach out to me. I'd love to chat with you for a few minutes and we can go from there. Okay. Thanks so much for watching my video today. If you have any questions about self-employed borrowing of mortgage loans, love to be the resource for you. And I look forward to chatting with you in the next show. Have a good one.